We've got Amar Singh from Angel Broking who joins us now. Amar, good afternoon. It's good to have you on the show. Let's start off with your near-term view on the Nifty. We have remained in this range of consolidation of 100 points between 86 and 8700, and we are left with just 3 more sessions, inclusive of the third session, which is expiry for the August series. Where do you see expiry, firstly, and your near-term view on the benchmark?
Yeah, overall, Nifty, we've been seeing complete range-bound trading. It's a 200 point on Nifty, 87. If you look at 8730 on the upside and 852030 on the downside. So that's the level that we are seeing for Nifty, because the market is lacking some fresh trigger. We have the announcement of the new governor of RBI. So markets haven't really rallied on that. But overall, what we are seeing is that some profit booking, because individual stocks have really taken off. Some of the stocks are performing exceedingly well. They're hitting 52-week highs. So it's basically stock picking that's important. Overall, we are seeing pressure coming in from the IT sector. So that's really pulling down the indices. Banking stocks, public sector banks, they've been doing really good. Metal stocks have been doing good. So it all boils down to specific stock picking. As far as the expiry is concerned, we are looking at that it could be in this range, as I said. On the downside, it would be 8520, 8530, and on the upside, 86, 80, 8700 levels would be a level to watch out for. But major breakout only above 8730 would determine the next leg of rally up if it happens. Yeah.
Right. The Bank Nifty then, Amar, because the Bank Nifty has been quite strong. We have convincingly broken the 19,000 old resistance as well, and now probably it's a reasonable area of support. Some profit booking that we are seeing today, but in the last week we've seen very solid gains on that index. What's your outlook there?
Yeah, Bank Nifty in particular, last week, as you rightly said, Bank Nifty gained almost 443 points. So that was a significant rally vis-a-vis if you look at Nifty, which ended marginally down by 6 points. So there's not much of movement on the index, be it the Sensex or the Nifty. But yes, Bank Nifty, and primarily look at the triggering point. The SBI merger plan goes through with the associate banks. That's the trigger. Also, you've seen some private banks really rallying. Even look at Karnataka Bank, it's rallying today. So public sector banks could be a buying opportunity on any dip. Karnataka Bank could be a buying opportunity around 155 levels with a stop loss of 151, targeting 165 levels. Technically speaking, Bank Nifty is definitely stronger as compared to Nifty. If we look at on the higher side, Bank Nifty sees resistance around 19,500 to 19,600. That would be the level of resistance that Bank Nifty would see in the immediate future. But overall, Bank Nifty definitely is stronger as compared to Nifty.
Sorry, I missed you. What level of resistance did you mention for the Bank Nifty again, Amar?
Yeah, a Bank Nifty on the upside, 19,500 to 19,600. That's a major level of resistance on the upside, because that would be the level where we'll see a lot of, if it moves to that level, we'll see a lot of selling pressure coming there. But overall, if you look at the trend, if you look at from a short-term perspective, from a medium-term, long-term perspective, banks are still looking good. Public sector banks are doing good. We've seen, as I said, Karnataka Bank. That's a good buying opportunity. We look at other banks like SBI. These banks have rallied. Even private sector banks have done really well. So banking, that's the reason we are seeing strength in the banking. Nifty, as I said, IT stocks have really been pulling down. So TCS, in the IT space, TCS could be a sell. It could be a shorting opportunity in the TCS futures. Somewhere in the region at 2570 could be a sell with a stop loss of 2610 and a target of 2500 levels on TCS.
All right. In fact, I was just about to come to you with the IT stocks, but I understand we also have Mahantesh Sabrat of SBI Capital Securities joining us. Good afternoon, Mahantesh. It's good to have you on the show. Let's start off with your view on the near-term view on the Nifty. Are we likely to remain in this consolidation zone at least till expiry, or do you see some levers above 8730? Because 8728 has been the year's high, and we've just cooled off or remained in this band post that.
In fact, we are looking for the market to remain sideways right until, let's say, December thereabouts, because there seems to be no immediate trigger available for the markets to really grow any higher. And that's got to do with a lot of factors have already been getting priced into the market. So things like a GST passage, the monsoon, the 7th pay commission, and the general inflation being lower. So all these factors are already priced in, so see the market moving actually sideways.
Right. In terms of sectors, Mahantesh, let's talk about the defensives for a bit. We've seen some weakness play out in the IT pack, but TCS has been the relative performer compared to its other large cap peers. What would your view be on the larger cap IT names for now?
So this year we've been actually looking at a subdued IT space kind of performance, and that's simply because we are seeing there are global pressures coming onto the IT majors. There's no real growth that can be seen in terms of new deal wins coming in a substantial manner, and issues such as Brexit, etc., are going to weigh upon the IT sector companies. So our view therefore remains that irrespective of the near-term stock performance on a relative scale, the entire pack should remain actually underperforming the market.
Right. Amar, about pharmaceuticals then, I mean, do you think on some of the larger names the bottoming out is already through, and now we can see some material gains coming in for certain pharma counters, and any specific names that you would like to highlight there? Something like a Vocart, which has been extremely volatile as well?
You have to categorize them into two parts. One is the large pharma.
If we look at the pharma space in particular, that's also been seeing a amongst the pharma companies also we've seen a sell-off happening, and if we talk about Vocart talking about Vocart Pharma, we are seeing a sell-off in Vocart Pharma. It's really corrected sharply from almost 1100 levels to trade around 770, 800 levels. So it's still a sell-on rally. It's not a buy, I would say, because 700 levels is a major, 680 to 700 levels is a major level for Vocart Pharma. So our advice would be that at least on the Vocart Pharma, you should be cautious on the buying side, because still it's yet to form a consolidation or a base, and the magnitude of the fall that was there, that's not going to be very easy for Vocart Pharma to bounce back. So any pullback should be used as a shorting opportunity in Vocart Pharma. For long-term positions, you'll have to look at least 740, 720. Those levels are very crucial for Vocart Pharma. If those levels sustain, then we could see some upside. Otherwise, we would see some selling pressure coming again in the pharma stocks. Overall, we are seeing selling in pharma stocks as well. There's pressure as compared to the outperformance in the banking sector.
All right, fair point, Amar. Just hold on to that. Let's also focus on the air traffic numbers that have come up. It has surged in the month of July, growth of 25% quantum, and it's quite a strong growth in terms of the passenger traffic that has been reported for the month. Indigo holds the highest market share, while SpiceJet's PLF, that's the passenger load factor, is the highest at 92%. Priyanka, take us through the latest trends that you're picking up from this month's data.
Well, yes, domestic airlines did see a record growth in air traffic as they carried 85 lakh passengers in the month of July. This was almost 26% higher than the 67.62 lakh passengers in June this year. Passengers carried by domestic airlines during January to July 2016 were 560 lakh, which is 23% higher than the 455 lakh passengers during the same period last year. In terms of market share, Indigo continues to be the leader with a share of almost 40%. Jet Airways has the second highest market share at 16%. National carrier Air India has the third highest market share at 14%, followed by SpiceJet, GoAir, Vistara and AirAsia. Now, in spite of a lower market share, SpiceJet enjoyed the highest passenger load factor of 92% in July, although lower than the 93% PLF in June. Now, remember, passenger load factor or PLF is the measure of seat occupancy on flights. SpiceJet was followed by GoAir, AirAsia, Jet Airways, and then Indigo. Indigo's PLF stood at 83%, which is quite an improvement over the 77% in June. And on the other hand, AirAsia saw a drop in PLF from 90% in June to 85% in July. Vistara also saw a drop in PLF from 79% to 75% in July. Now, this is in spite of the airline changing its seat configuration to reduce business class seats and increase premium economy seats to improve seat occupancy. Back to you.
All right, thanks for those details, Priyanka. Let's also quickly address the flashes at the bottom of the screen first, and then we'll go across to our market guests as well. Hindustan Copper has reported a net loss of 2.8 crores as opposed to a profit number of 20 crores in the year ago period. Just trying to access the PNL. In the meanwhile, we can take a look at the stock reaction. It's up 2.9% as we speak, but that's the number that we have right now. It's a loss. Maybe possibly there's some anomalous item after the operating line, but that's how it is. 2.9% is where the stock is. Mahantesh, coming to you, as far as some of these aviation names are concerned, would you exercise any preference at all at this point? There was a CLSA report as well, if memory serves me right, on Indigo, that closer to the listing price, it's a fruitful buy opportunity. But given the fact that crude has also gone up from levels of 27 to 50, how much of benefits do you see being retained? Because obviously ATF is a major chunk, almost 40% of the operating costs. Mahantesh, any preferences in the pack?
So we don't cover the aviation space, but nevertheless, since you asked me the question, see, the times are a little difficult for the aviation space. Although the domestic traffic has been growing very robustly, upwards of 23-24% for this year, what is problematic for the industry is that the capacity addition is going to be quite substantially high for the winter schedule. We will see most of the capacity addition coming in from Indigo, who is the market leader, followed by certain capacity addition coming despite keeping the fleet size the same, certain capacity addition coming in from Jet Airways through its operations of the wide-bodied aircraft. So all in all, what one can see ahead is that there would be pressure on pricing as we go ahead, which we saw in the first quarter results of most airlines. They reported domestic yields year-on-year drop by almost 10% between 8 to 10%. So that phenomena will remain for quite some time before one can really say that the airlines will start doing better. So therefore, what I'm saying is there will be a large top-line growth led by volume, but a price depression. But the profitability growth won't be as commensurate as the top-line growth.
All right. We have the detailed numbers of Hind Copper as well. The revenue has gone down by 30 crores, and that's the only dent, and because of which obviously the operating profit has also shrunk. In fact, it's an operating loss of 17 crores. If you even add back the depreciation, it's a single-digit EBITDA number that we arrive at. 14 crores was the operating profit in the year-ago period, and inclusive of depreciation of 26 crores, it comes to 40 crores. So the EBITDA in the year-ago quarter was 40 crores, and in this quarter, it's only around 6 to 7 odd crores of an EBITDA number. The revenue number, that has contracted the total income by around 30 odd crores. The other income is 4 crore higher, is at 14 crore as opposed to 10 crores, and the loss number is consequent to obviously the sales reducing by that bigger quantum. The overall costs are absolutely intact, so there's no spike up in cost, and you can see the stock reaction as well. It was up almost 2.9% just 5 minutes back, and once the numbers have been absorbed, it's now down 0.4%. So it has been a subdued quarter for Hindustan Copper, primarily owing to the fact that the revenue, the top line number has gone down, but on the cost side there are no demons. The other income is a little higher, so it's just the revenue that's the pain point here. Amar, coming to you, from among the metal names, any preferences that you have right now after the very strong run that some of the base metal names that are exposed to copper and aluminium more, like Hindalco, Vedanta, Tata Steel also reportedly, the Port Talbot facility has reported a profit for the month of June, which is quite a positive. Any preferences from the base metals or the steel pack?
Overall, the base metals pack, we've seen a spectacular rally, be it Vedanta, be it Hindalco, be it Tata Steel. So Vedanta still looks promising. It had recently made a high of 180 levels. Currently is trading around 176 or so. Overall the trend is definitely very strong for Vedanta. So it can be a buying opportunity, because if it continues to sustain above 180 levels, then we could see the next leg of rally in Vedanta. So I would say that we should wait for a breakout for this, because it's really rallied, and for the last few days in particular, from almost 160 levels it's gone to 180 levels. So it's a more than 10 to 12% rally that it has witnessed. So we'll have to wait for a breakout, because we are seeing, as I said earlier, that we have seen a significant rally in the metal space and the banking space. So we are likely to see some profit booking and correction. Also, the sentiments in the pharma sector and the IT sector, they are not as good. I would say there's some selling pressure there. That's the reason we are seeing this range bound trading and profit booking being witnessed in Nifty and the Sensex. So as far as Vedanta is concerned, we should wait for a breakout, because if that happens, then we could see some significant rally there in Vedanta.
Fair point. Mahantesh, comment on this from the metals pack. I mean, there are many smaller names that have done well. Say, for instance, a Mithon Alloys, which I mean, hardly anyone notices such names. But from the larger metal names or from the steel pack, any preferences that you have right now?
Actually, we've been taken a little by surprise by the rally in the metal space. Go back 2 months and there was the Brexit event, or 3 months back there was the Brexit event upcoming. There was the MIP expiration that was going to happen, and we generally expected that the Fed will signal a rate hike. But none of these events really played out. So metals being a global commodity kind of play, all commodities continue to rally well into August, and that effect is being seen on even the domestic producers, thanks also to the MIP extension. So we've been taken a bit by surprise, but having said that, the outlook now remains quite strong for some of the metal names, simply because there is a great deal of interest that is coming in these stocks from various participants. And of course, when the prices are high, you tend to generate a great amount of cash flows. So I think some of the metal names will do well. You named a few of these smaller metal names, but quite frankly, we don't really track them. So very difficult to take a call on or say anything about those stocks.
Right, so that's about the metal pack. Also, FMCG, Mahantesh, if you have a view there, because we have seen a range-bound move play out on the larger names, but many of these smaller names, I mean, an Emami or a Dabur, have been big beneficiaries of the raw material costs going down, even something like a Bajaj Corp for that matter, because there have been the liquid light paraffin costs that have come down, there have been packaging costs that have come down, but now since crude is on its way up, and possibly the benefits of the copra prices and the other raw materials may not be as big. So how much of a margin benefit do you see in the quarters coming ahead? Do you think that story in terms of the FMCG and especially in the tier 2 pack is still alive, and it can go on given the consumption boost that we might see in terms of the smaller FMCG names?
Okay, when you talk of FMCG names, you are right that many of these players really enjoyed the benefit last year when crude fell substantially down. So the cost reduction that they saw were not entirely in a way priced into the market or passed on into the market. So therefore they enjoyed a huge jump in their margins. But having said that, what has been dogging the sector is that there's been no volume growth, or the volume growth has been in very poor single digit numbers, and that's playing on many of the larger FMCG names. So the smaller FMCG names, between the tepid volume growth and the cost reduction that they have, see a large jump in their profitability and earnings, whereas the larger FMCG companies typically rely more on the volume growth and the pricing power that they get along with the volume growth. That's sadly been absent in the market. Hopefully, as we move ahead, the good monsoons as well as the 7th pay commission payout should mean that some of the FMCG names should start doing better. So the prospects for the sector look better from here on onwards. You have to be very selective on which stocks you want to really buy.
All right, let's focus on market closing as well. We're just half a minute away from there. Pull up the Nifty first. It has been, again, a weak and subdued day, but not extremely weak. We have held on to the 8600 level, and this has really been the theme that has played out. A range-bound move between 8600 and 8700. That's what we have exactly seen on the first day of this week as well. We are on net down 40 points, and we are at 8626, 8627. Let's go through the major movers then. TCS is up on your screen. That's a major laggard. And let's start off with the weaker names first. So you've got Grasim Industries, which is down 2% as we speak. Aurobindo Pharma down 2.4%. There's Ambuja Cements down 2.3%. Yes, Lupin is down again 2.3%. There's ACC down 2.1%. Some of these larger cement names had seen really good traction over the last week and a half. So some profit booking expected there is not anomalous. NTPC reported a stable set of numbers. The stock is down 2.1% by the time we've settled. It's just 2% lower. Sun Pharma is 2.1% lower. So some of these classic defensives. Pull up a TCS as well. It's I think 1.9% down as we speak. So 2.1%. So there is weakness across some of these larger pharma names as also the larger IT names together. Let's talk about the contribution-wise movers, and you'll see that TCS as well as Infosys. Infosys has recovered a little, although from the day's low point, but still it chipped in with around 10-11 points of a downward move. 0.5% lower is where it is. TCS chipped in with 30 to 32 points of a pressure on the Sensex. So that's where some of the pressure came from. There's Sun Pharma and Lupin, which together contributed around 20 to 22 odd points on the Sensex down move. From the private banking space, you had Axis Bank that was a little weak in terms of contribution. It contributed 17 points. SBI contributed 12 points. ICICI Bank was also weak in today's session. So nothing really helped the Bank Nifty to tear away beyond the 19,500 level, although there is some writing and some resistance that is still there. Let's pull up the Bank Nifty as well on that note, and then we'll come to the small caps and the mid caps as well and how they've fared. By the time we've settled, there are only 4 counters in the Bank Nifty that have been on the green side. Bank of India, HDFC Bank, Yes Bank and Canara Bank, all with gains between a range of 0.1% to 0.8%, and that's the highest for you. Bank of India 0.8% higher. 8 counters declining on the Bank Nifty. The biggest cuts we've seen on an SBI. SBI is down 1.7%. Axis Bank is down 1.2%. Bank of Baroda, Punjab National Bank, Kotak, ICICI. So the composition is fairly mixed. I mean, there's no segregation between private and public players today. It's an overall index move. The overall index move was very strong last week. We've crossed the 19,000 level. Today was a day of profit taking, a bit of rest, a bit of consolidation at the index level. We are still at 19,330. The signs seem to be good for the Bank Nifty, even as we close this kind of subdued session on Monday. Let's talk about the mid caps and the tier 2 names. So certain smaller names from there. Deepak Fertilizers locked on up circuit, 20% higher is where Deepak Fertilizers is. That'll be up for you. Yeah, there you go. There's Minda Industries, 11% of an up move there. JK Infra Projects, that's again locked on up circuit with a 10% gain straight up is what you've seen on JK Infra Projects. There's Titagarh Wagons, certain of these names from the rail space, so be it wagon manufacturers or component makers, 7.5% for Titagarh Wagons, and that's probably near the day's high point is where it is closing. There's been no material sign of profit booking there. Pull up Texmaco Rail, 4.5% higher as well. So a couple of these names have done well. There's a KRBL from the rice space, 5.1% higher. Tier 2 pharma space, Clariant Chemicals Clariant was doing well at one point in time. I think it's closed with 4.3% gains, if I'm not wrong. Then there's Dishman Pharma with 5% gains. Yeah, there you go. Clariant Chemicals is 4.6. Dishman Pharma is 5%. It'll be also interesting to pull up some of these city gas distribution names. Indraprasth Gas, that reported earnings numbers. It was a robust set of numbers. 4.9% higher is where IGL is, and let's see where the price is. It's crossed 731, mind you. IGL was a stock that was finding it difficult to cross 620, 630 by the end of July, and now we are sitting on very strong gains on IGL. There's a very strong move. 730 is where it is. Pull up something like a Mahanagar Gas. That's a recent listing. You may not see the gains in today's session, but that stock has gone up from 520, 508 odd. So that's also a big move coming in for Mahanagar Gas, and it has been a reasonably strong candidate as well. From among the other names, you've got Solar Industries, which is up 4.8%. Texmac already mentioned. Let's take a look at few of the losers as well today from the mid-cap space, and there are names like Hexaware, which is weak in trade today. There's Carborundum, there's Cox & Kings, Fortis, VRL Logistics as well. JK Lakshmi Cement, that's 2.1% lower if I'm not wrong. It's also Aurobindo Pharma, which is down 2.4%. That's from the large cap pack. CEAT is down 2.4%. Fortis Health down 3.7% as well. Cox & Kings, Godfrey Phillips, JK Lakshmi Cement, which is down almost 2.2%, and Voltas 2.2%. So the composition has been mostly mixed, and we on the index level at least, there has been that consolidation move that has continued, and the Bank Nifty has been the more resilient force. Coming back to you, Amar, closing thoughts before we enter into tomorrow's trading session. Do you think that this phase is likely to go on? By the time we expire, do you see a material move beyond 8,700, or would you remain conservative and say that we are likely to remain where we have been for a while now?
Actually, the way the markets have been trading over the last few weeks, I would say, almost 8 to 10 trading sessions, the markets are really lacking the triggers, because we had the FOMC minutes come out last week that was a positive trigger for the global markets. So we did see some upside there, but that's not been sustained, and also we are not having some, and we had the WPI numbers, then we had the CPI numbers, so they were not very supportive. So somewhere or the other, the markets are, I would say, witnessing profit booking, and it's a cautious approach. As I said, it's going to be stock picking, it's going to be specific stocks which are going to outperform, but overall, as far as Nifty is concerned, I see it completely range bound, because the moment it reaches 8,700 and 87, 20, 30 levels, that's going to be a level of selling. We are seeing selling coming around 86.80, 86.90 as well. But on the downside, yes, there is support for the markets. Major support, as I said, would be 80, 85.20, 85.30 levels. So this is the range that we are seeing, and currently it's 100 points up and 100 points down where it is currently, you can say, trading. So it's going to be, as I say, it's going to be a balanced play between the bulls and the bears. But yes, if the market breaks these levels, then we could see some selling coming into the market.
Well, absolutely. I mean, that's what we've been seeing playing out for a while now. Before we wrap up, Mahantesh, any sectors, any mid-cap stock ideas that you would like to flag off?
So as far as the sectors are concerned, we remain very upbeat about the BFSI sector. We think there could be two stories playing out in the year ahead. One is strong recoveries after the AQR that was set in last year, and the second story is growth in credit. So we've had tepid credit growth thus far. So the BFSI space is something that we currently like. In terms of stock specifics, one has to be really very choosy. We have certain outstanding buy calls in such stocks as JK Tyre or Granules India, for example, or even the names like a Navkar Corporation. So some of these small mid cap names are the ones that we have been very selective about.
All right, gentlemen, on that note, we'll wind up here. But thank you so much, Mahantesh Sabarad, as well as Amar Singh, for joining us, sparing the time to be with us and giving your index view as well as stock and sector-specific ideas as well as strategies. We take a very quick break now, but on the other side, on Rising Stars, we feature the fashion subsidiary of Future Group, Future Style Lab. We talk to CEO Manjula